Thanks, Joe. Good morning, everyone, and thanks, Peter, for having me here today. Adam, that's a tough gig to follow. So let me give it a crack on bringing you back to our story. Someone old and wise once said to me, lithium is the salt that you put in the salad, that you sprinkle on the salad, and that nickel is the steak. So I'm now going to speak about the steak that we have. The picture on the screen that you see, it's a photo that was taken by our general manager or the geology manager on site, just as the sun is rising on the horizon, about 5 a.m. in the morning. This is the Savannah nickel sulfide mine, which is located in the Kimberley region of WA. We are in the process of ramping up, and we are producing nickel, copper, and cobalt in a bulk concentrate, which is battery metals, and hence I'm here today. So over the next 20 minutes, I'll take you through our story and show you the value that we present in the market. I'll skip through the usual disclaimers, and this presentation has also been lodged on the ASX platform. I'll start off with the corporate overview. We have about 2 billion shares on issue. Our share price yesterday was 12.5 cents, which is giving us a market capitalization of about $260 million. If you have a look at the graph there, our share price had come down from April when the nickel price was really high. And if you ask me, our share price is definitely very cheap at the moment. And I'll speak about that a little bit more. In December, our cash balance was about $27 million, and we have a debt with Trafigura that is currently at US $43 million. And Trafigura, it's a relationship with Trafigura where we have an offtake agreement with them to produce and supply the concentrate for the next 5 years. Our largest shareholders, if I go back to the top 20 shareholders, they control about 70% of the issued shares in Panoramic. Our largest shareholder is IGO, which owns just over 21%, and that came about after they took over Western Areas, which was a nickel producer last year. Our second and third largest shareholders are Zeta and Ausbil, and all three are very supportive shareholders. The board and management has been there for a long time, and we are very experienced operators. With me today, we have Grant Dyker, our CFO, and our exploration manager as well, Andy Shaw-Stewart, and they are in the booth if you wanted to have a chat later. I said we are cheap, so I'll give you some more context. If you look at Australian nickel producers with an Australian asset, if investors wanted to go into the ASX to get exposure, there is very few available, and at the moment there's only 4. And then if you look deeper, you actually see that there's only 2 companies that are pure nickel players or exposure to nickel, and we are one of them. And both the companies are actually in the ramp-up phase to become a producer, and this is Panoramic in Minco. But our prices, market capitalization is very different. We are under 260, and I did this yesterday. So at the close of business yesterday, Minco was worth $560 million. The battery mineral space is very heated up, and you could see that Wailu put a bid for Minco earlier today, and that's now valued at $760 million. So the space is definitely heated up, and I think there's going to be more activities this year and in the future as well. If you look at the space, only last year, Wailu and BHP went to battle over Norant, and then Wailu ended up getting Norant. And as I mentioned earlier, IGO went after Western Areas and got them at the middle of last year. And BHP are just in the middle of finishing a deal with OZ Minerals at the moment. What we are also seeing is that the end users are now trying to come into the mining side as well, and they are trying to lock in supply to make sure that the battery market is very well fed. And you're seeing Vale did a deal with Tesla, and then BHP has done a deal with Ford and Tesla as well. So this trend I'm pretty sure is going to continue in the coming years. Switching over to our site and a bit of an overview, our operation location hasn't changed. So we are still in the Kimberley region of Western Australia. All the infrastructure is in place. The port is Wyndham that we ship our concentrate out of. And it currently is, our first sale is to Trafigura next week. Our tenement holding hasn't changed. It's still surrounded by IGO in all directions. And we are quite busy working in the central part of the tenement package. We are focused mainly on the center. That's where our current operations are, but we certainly have ground to explore into the north and south of us. The picture to the right is the mining side. The mine to the right is the new Savannah North mine that we are in the process of ramping up. And the old Savannah mine is the one under the open pit. So when I look at this picture and say what's changed, it's mining that's changed over the last year. So last financial year, as we were starting the mine, we mined about 400,000 tons that year. This financial year that we are currently in, we said we'll double it to 800,000, and we plan to be at nameplate capacity by June, July this year. So that's our runs that we're getting on the board. And we have 12 years in front of us with Savannah North and the remnants that's left over at Savannah at the moment. And just on the side, the old Savannah mine, that was mined over 12 years, and the company paid out about $114 million in dividends during that period. So we are hoping to do similar with Savannah North. Oops. Last week, we put out our updated mine plan. So basically what we had to do was, in September last year, we finalized our resource and reserves, and we wanted to put our latest cost that we are incurring in the market, see how the ramp-up profile is going, and then predict what we are going to be doing over the next period, or the next 12 years. And what we found was that the project was very economical. We ended up getting a longer mine life, so we got a minimum of 12 years now. The financial outcomes were really good, and what we found is, compared to the previous projection of the nickel production, we are now going to be sitting at about 9,400 tons of nickel per year, just over 5,000 tons of copper per year, and over 700 tons of cobalt per year. The all-in cost is going to be about $8.57 a pound. So if I were to compare it to today's price, it's about $15.20 a pound. So there's certainly a healthy margin in the operation. And when you look at the long term, what this project could deliver, we are looking at a cash flow of $1.4 billion. That's $1.4 billion from this small operation in the backyard of WA. The pre-tax NPV is about $844 million. And we are currently carrying a tax loss at the moment. So when you bring that into the financials, the post-tax NPV is quite healthy at just under $700 million. The graph to the left shows you our production profile. The cost is the black line. And you could see that in the first 2 years with FY23, the cost is high. And that's mainly because the project is ramping up. There's less production than in the future years. And there's additional capital cost that's being incurred as part of setting the mine for the future. And eventually it becomes a production mine from year 2, year 3, and then the cost starts dropping off. Switching to the operation now, when we started the project, if I look at safety, when you started the project, you always see incidents occurring because people are trying to get used to the new site, and we certainly saw that. We put a lot of systems, processes, and supervision and management in place, and we started seeing the TRIFR, or the total recordable injury frequency rates, starting to drop down. And I think we've got a really good culture on site now, being led by our general manager on site, Brian Watson. And that's one of the reasons that I think we are seeing numbers as close to 2%. The TRIFR rate is about 2 at the moment. Switching to the mining side, I have to say we are very fortunate that we have 100% of the workforce that we need to be on site, and also the equipment on site. What we saw recently was the high rainfall in that region. So we've read news about the northern part of Australia being hammered with rain. We've certainly felt some of that, more so on the logistics route. So we've had issues with roads being closed and having issues bringing consumables and parts to site. We currently have 2 production horizons. So if I look at Savannah North, which is the picture on the right-hand side, you can see that the green and the red bits are what we plan to mine until June this year. And then FY24, which is from July, is the blue bits that we are planning to mine. And we are concentrating on the top part of the Savannah North mine. The yellow bits are what we are going to be mining over the 12 years to come. On the Savannah side, which is the one under the open pit, and this is where we are currently mining the remnant areas. That remnant area is slow in mining, so it'll be nice to have something else to bring to the table to take that risk off. And we gave that challenge to the geologists. We gave them a small amount of money and said, try and find us something else or something more. And sure enough, where the old Savannah mine finishes, they drilled under it, they found more material, and now we are going to push through that in April this year to be to be ready to be producing from FY24. The geologists are they're very clever people. They're very, they're out there, and we wanted to name what was under the Savannah pit, I guess, or under the Savannah ore body, and they came up with Savannah Extension. So now it's called the Savannah Extension, and then we have Savannah North that we're mining to the right-hand side. And these are 800 meters apart, so it's not interconnected. People have been asking about cost a fair bit, and I even got hit at the booth a couple of times about our cost. What we are seeing at the moment is that we have a very stable workforce, very low turnover, and fuel price is trending lower. So which is good for us because fuel price is about 20% of the whole operations for us. We have various projects underway at the moment for business improvements. So the whole idea was ramp up, and then we look at ways to bring our costs down, and that program is now underway. The Fitzroy Crossing bridge got washed out in February, so we had to actually transport material through Darwin. And that's being managed really well. Our cost is a little bit high, but it's nothing substantial. So overall, the mining side is coming along quite nicely. On the processing side, very similar story. We have all the labor, and they are very well engaged, and that's through our contractor in Primero. Again, with the rainfall, what we saw on site, there wasn't much rainfall on site, but when we had a planned shutdown in February, and what we found was we couldn't get the materials and some of the shutdown crews to get on site in the time that we wanted. So some of that shutdown period got extended. What that ended up doing was that if the mill was down, it cannot generate paste, so you couldn't paste underground, and then the underground slowed down with production. But by early March, everything was back to normal. The processing plant is up and running, and the paste is running underground to paste fill all the stopes. The nickel recovery at the moment is about 81%, and we are planning to get to 83% as the grades that we are putting through the plant improves. Very positively, this quarter that we are currently in, we've already shipped 16,000 tons, or just over 16,000 tons of concentrate. We've got another ship coming next week, which will make 3 in a row this quarter, and that's the first shipment that's being sold to Trafigura as part of this debt and offtake agreement. And we actually get better payabilities for the nickel that's in that concentrate through them. And a very similar story with labor. Labor is certainly stabilized, not much turnover. The fuel price is trending lower. But more importantly for us, the shipping cost is reducing a fair bit. So these are good things to help our numbers in the coming quarters. I'll switch to exploration. So we're a small company, tight budget. Last financial year, we gave the geologists about $3 million to explore and drill. And they added about 5,000 tons of nickel into the system, and about 3,500 tons of that got converted into reserves for the mine plan. That might sound pretty low, but in our revenue line, it's worth about $100 million, right? So this year we did the same thing. We gave them about $3 million to drill, And 2 weeks ago, we put out some announcements about the drilling that we are getting below the 1321 level in Savannah North. So this is an area that we will be mining from over the next FY24 and FY25 is the area we are going to be going into. These are spectacular hits. We are talking 15 to 30 meters width, like they're thick ore bodies, and the grade is about 1.8 to 2.3%. Now, I say it's spectacular grades because our life of mine grade for the mine is 1.2%, right? So these grades haven't been put into the resource and the reserves model. They will be entered in August, in their August update, and then they'll flow into the reserves and into the mine plan schedule just before we start mining. So very pleasing to see that our geologists could add more value to what we have. So as mentioned earlier, we gave the geologists some money to drill under Savannah, the historical workings of Savannah, and they found more for us. That's the area that I call T1, which was target 1 for us, which is now called the Savannah extension. And you could see some of the hits that we got in there. So we are talking widths of 9 meters to 30 meters, and the grade is between 1.1 to 3% nickel. Again, very good grades that are yet to be put into the reserves that's going to come out in August. But we are so confident that we are actually going to go into that area starting April this year. Once the geologists found the area above the 900 fault and below the historical workings, they actually said there's a good chance that there's more resources below the 900 fault. So you can see the line there, the 900 fault. And what the geologists wanted to do was drill they were going to drill 2 downhole EM holes, then finish a downhole EM survey, and then come up with a plan to drill below that ground to further grow the resource that could potentially be there. The benefit of finding something in this area is that then it adds more volume to the mine, and we are able to process more material through the processing plant. I can't wait to hear what the name of this resource is going to be, but I bet you it'll be Savannah extension on extension, because they're very, very original, the geos. On the surface exploration side, listen, we've had this tenement package for now nearly 24 years, I think. And we've done minimal effort. We have spent minimal effort in this area for the last two years because the focus was the underground. But what we are planning to do once the wet season is over is at Stony Creek and the Northern Ultramafic projects, which are very similar to like a Savannah-style prospectivity. We drilled a couple of downhole EM holes last year. They haven't been surveyed, so we're planning to do that in the dry season before we come up with another plan to drill further holes. The Frog Hollow is quite an interesting prospect. We drilled 3 holes in 2018, and we found vanadium and titanium in that ground. It's a big footprint. We are talking 8 kilometers by 2 kilometer footprint, and because vanadium and titanium oxide is part of the battery, it's in the battery space, they're good for stationary batteries, we'll push that through in the next couple of years, in FY24 and 25. The Norton intrusion is the 4th one. It's my favorite because even though we've had the ground for 22 years, that part of the project area, we never had a land access agreement with the traditional owners, and we only got that in 2021. And so that was the first stake. In the next coming months, we are going to do a heritage survey in that area. Once that passes, we can start drilling that ground. So this ground hasn't had any drilling at all. There are ultramafic outcrops on the surface, but we think it could be like another Savannah North, like, undercover, 300 meters below surface type prospectivity is what we are targeting. So it's definitely exciting prospectivity on that ground. Switching to the sustainability side of things, we are tending to take a practical approach. The site runs on diesel power to power the power station, the underground, and the general admin areas. We burn about 20 million liters a year of diesel. So the idea is to reduce that carbon footprint. It's a small amount of fuel we consume, but we think we could cut the number down significantly. So we've actually received proposals from third-party power providers to build a solar farm on site with a battery backup to it. The size is growing. Like initially it was going to be 10 megawatts. Now it's currently sitting at 14 megawatts. We should have a much more detailed idea on how we are going later this year. But it more than likely we've got two choices. One is Pan builds and runs the power station, or a third party will come and build it, own it, and operate it, and we just pay a usage charge. On the underground side, I can't wait to see an electric fleet running underground, because it certainly takes the pressure off excessive cooling and ventilation requirements, which drops the costs down considerably. And it also improves productivity. So our mining contractor is Barminco, and we are working with them to come up with a sequence of when they're going to replace the fleet in years to come. But everyone has to take one small step at a time, and FY24, we are expecting our first battery-operated light vehicle to come to site. So, it's a start for us in a 12-year long innings that we have in front of us. Looking at the sustainability side around the community, we are very engaged in the Eastern Kimberley communities that we operate in. We sponsor the Teach, Learn, Grow program that works with the young kids in the schools of Wyndham and Kununurra and focuses on education. And that's been well received by the community, and we get to see we've seen some major changes in these kids. We also sponsored one of the younger kids from the Warman area into the Fremantle Dockers cadetship. I'm a long-suffering Fremantle Dockers supporter, so I'm hoping this kid gets us a flag one year, and wouldn't that be a great return on investment for us? So anyway, so talking about return on investment, and if I look at the value proposition, we have an operating mine that's just ramping up in the backyard of WA, producing some of the critical materials that the world is seeking for, right? We have an offtake agreement with Trafigura for 5 years with very improved payabilities to what we had previously. The all-in cost that we're forecasting is $8.57 a pound, and as I said before, the current nickel price is about $15.20 a pound. And it's going to be generating about $1.4 billion in cash. And the NPV is a healthy $844 million. And the market cap at the moment is about $260 million. So on that note, I will leave you. Just remember, Savannah Nickel Mine, 12-year mine life in front of it, and great exploration potential. Okay, thank you.